Our guest is Dennis Brager, and Dennis is really a tax expert. And again, if you have a question, you could call the show and ask him now, or you could email him. Dennis, tell us some more ways, if we've got some problems that maybe we haven't touched on, that we can deal with the IRS, please.
One of the things you would want to do is, if you have penalties that have been asserted against you, late payment penalties, late filing penalties, you want to see if you qualify to get them waived. And there's two basic ways of doing that. One I refer to as the good boy or good girl rule, I guess. And that says that if in the last 3 years you filed all your tax returns on time and you paid them on time, then you'll qualify to get the penalties waived this year. So the IRS doesn't do that automatically. You have to ask. So that's one thing you can do.
Okay.
And the other way, if you don't qualify, and by the way, that rule you get to use only once in your entire lifetime.
Okay.
So if you've used it up or you don't qualify, then you have to show the IRS you had reasonable cause for paying the taxes late. And what with COVID-19 and all the economic dislocation people are going through, I think that many people will be able to explain to the IRS how it was that they got into the situation where they were unable to pay. In normal times, this is a pretty difficult thing to achieve, but my best guess is that, again, with the economic dislocations that the whole country is going through, it'll be somewhat easier to try and do that.
My producer, while we were on the commercial break, talked to you about people that are getting unemployment checks, and especially that extra $600. And his question to you was, will that be taxable? And I believe I heard your answer was that would depend on what your total income is. But my question to you is, for most of us at the end of the year that work, we get a W-2. I was 20 years old the last time I collected unemployment. So my question is, if you're getting these checks, will you get something comparable to a W-2 at the end of the year from the state or the federal government that shows that you got this money?
Yeah, I would expect that you're going to get a 1099, but I would be very surprised if you didn't receive some form or another reminding you of the fact that this is a reportable payment.
Scotty's my producer. We had a call during the break, and would you repeat the question?
I'll try to phrase this the best I can. The question had to do with when you apply for employment and you get the job at the location and you deal with pre-tax, where they list the number of dependents, where you listed it like 0, 1, 2, and so forth. What he was asking is it better to claim it as 0, where you get more taken out now, but you get more back later on, or basically list the number of dependents that you would normally file at the end of the year?
I always advise against having too much taken out of your check, because what you're doing is you're giving the government an interest-free loan. I suppose it's one way of enforced savings, out of sight, out of mind. But strictly speaking, there's really no reason to do that. In a perfect world, you should get a 0 refund and owe 0 in tax.
Yeah, right. A few more suggestions, again, for people that are having problems this year. Go ahead, Dennis. You said you had a few more tips.
Yeah, and this is sort of an overall tip anytime you have to deal with the IRS. And that is, the IRS sends out a lot of letters, a lot of publications. And you need to read every one of those letters and every word of every publication they send you. Because buried in there is some important stuff that if you don't realize, you can get in trouble or wind up paying more than you need to. And the other part of that is a lot of these letters from the IRS have deadlines. You need to pay attention to what those deadlines are and get back to the IRS within the specified time. And when you do get back to the IRS, my strong recommendation is it's always better to do so in writing so you have a record. And you should send that by certified mail, return receipt requested. So in case the IRS loses it, which they do from time to time, you can say, well, here's the letter, and here's a copy of my certified mail receipt. I sent it to you just when I was supposed to. And I think those are, some of the most important things you can do when dealing with the IRS.
This is a different question for you, but is there such a thing, or what are the odds of being audited, and does it increase with the amount of income that you have?
Well, the chances of being audited in the traditional sense, meaning face-to-face across the table from an IRS auditor, are pretty low. It goes up as your income goes up. You're absolutely correct. But in addition to those traditional kinds of audits, the IRS is doing a lot of things with data matching these days. So if you don't report something to the IRS where you've been already issued a 1099 or some other form, the IRS is going to pick that up pretty quickly and send you a letter, ask you to explain why there's a discrepancy. And if you can't explain it satisfactorily, then you're going to get a bill with some penalties added to it.
I've also heard one of the things that maybe make you more susceptible to an audit is when you run a business from home, and you're declaring part of that expense for heat, whatever. Is that true also?
Yeah, look, the IRS has some formulas that it uses in selecting returns for audit, and those formulas are kept top secret. You've got a lesser chance of getting that information than you do of getting the formula for Coca-Cola.
Wow.
So, we don't know for certain exactly why people get audited, but certainly things that look unusual. So if you have a home-based business and every year you're saying you're losing $10,000, well, that might start an audit. What I tell people is, look, claim what you're entitled to. Don't worry about whether it's going to get audited. If you're entitled to it, take the deduction.
We've got about 3 minutes left. Is there anything we didn't cover you want to add in closing here?
But we didn't talk about so-called offers in compromise. If you're in so deep that it doesn't look like there's any way of getting out, then you may want to go to the IRS and do what they refer to as an offer in compromise. And, these are the deals you hear about on late-night TV, pennies on the dollar. And if your financial situation is bad enough, you can fill out some financial statements, and here you can negotiate with the IRS and try and get them to agree to accept a reduced amount to take care of the entire liability. And that could be done as a lump sum. You might be able to borrow a lump sum from a friend or a relative that's willing to help you out. And you can, in some situations, pay off a significant liability for, as they say, pennies on the dollar.
Dennis, it was a very enlightening discussion. Again, I've been talking taxes my last 3 shows, but you had some wonderful information and advice. You stay safe out there in California, and again, you have a wonderful weekend. Thanks for being on the show.
Thank you. Pleasure. Thank you for inviting me.